Hi everyone, welcome to the Fintech Market Update Webinar. We are looking forward to a great panel discussion. We have an amazing panel lined up, and my partner colleague and global Fintech sector head, Claudio Alvarez, will present our latest views on the market. Today's webinar will be recorded and will be available online. You can submit questions in the Q&A box below, and I would recommend you and motivate you to ask questions because the very good panel will be able to answer them very precisely and share their views. We are a global firm with approximately 100 employees and run our company on a single global P&L. That means we truly work together as one firm and ensure the best outcome for our clients. We are close to relevant financial investors and strategic buyers in the fintech sector, especially with our offices, for example, in London, New York, San Francisco, Hong Kong, and Paris. The panel today consists of very famous investors and entrepreneurs. Alexander Artopé of smava, Christian Nagel of Earlybird, Frederik Pfisterer of Mambu, and Stefan Tirtey of Commerzventures. We will start with the presentation of Claudio Alvarez, my partner colleague and global fintech head. He will present our latest views on the market. I would like to hand over to Claudio.
Great. Thank you for that introduction, Julian, and a pleasure to be with everyone here. So why don't we move on to the presentation where I'll be covering two of our trends. I'll be talking a bit around what's happening in the M&A and private placement markets. And then lastly, talk a little bit about valuations in the public markets. So one of the trends that we're covering for this quarter is clearly how during COVID, online payments have been one of the main beneficiaries of this accelerated shift to digital. And we're now seeing that actually buy now, pay later vendors are actually benefiting quite a lot from this trend as well, as consumers look for more shopper-friendly propositions and online merchants look to capitalize on the accelerated shift to online. And I think one of the sort of signals that we've seen through this is in early May, Visa in the US posted that the volume in terms of transactions from credit to debit had actually switched around. So consumers in the US were using more of their debit cards rather than their credit cards to make online purchases as they were looking to tighten up their belts, but also felt there was a shift around, not spending other people's money, so really sort of managing your own finances. And I think what we've seen through that is clearly vendors like Klarna, Afterpay, Affirm, and Zest Money in India being able to provide and step in to that gap where credit card vendors have been unable to sort of manage that. And I guess this quarter in particular, we've seen some significant fundraisers from the likes of Affirm, Klarna, which just raised that large 650 million round led by Silver Lake, where they basically doubled their valuation since the last round. And of course, everyone's kept an eye on Afterpay, whose shares have grown 173% year to date, with their latest sort of valuation being around $16 billion US. So we think this trend will actually be quite sustainable throughout, especially as online merchants look to, one, bring on board more valuable customers. And I think vendors like Klarna, Afterpay, and Affirm have shown that their consumer cohorts on average increase the value order size, purchase and more frequency. And then lastly, are sort of that highly coveted millennial demographic. So we think this is a space to continue to watch, and will continue to sort of grow as more and more consumers look for what we would say sort of consumer-friendly shopping propositions. If we can go on to the next slide. I guess the other trend that we've noticed for the last several months actually is that this sort of growing trend in more and more consumers now trading public equity shares. And in part, it's been because of the increased liquidity driven by central banks that I think has driven a lot of public share prices up. But I think what we're also seeing now is that these platforms are taking advantage of fractional share trading, also to some extent, given the level of cheap financing out there, consumers are able to trade on credit. But the growth in these platforms has been absolutely phenomenal. I mean, it's been said that on average, Robinhood is adding about 1 million, 1.5 million verified accounts per month. And that at the end of this year, they'll look to have north of 10 million funded accounts, which is quite impressive if you think about that they started this year with just under 5 million of funded accounts. So again, I think this is going to be quite an interesting trend over the next 12 to 24 months, in particular to see how these businesses cope when there's less volatility, or perhaps the central banks are providing less liquidity into the markets. But nevertheless, you know, these businesses are now generating substantial amounts of revenues, meaningful degree of user transaction. And of course, you know, we've seen our own sort of experts here in Europe with the likes of Trade Republic in Germany and Free Trade here in the UK, all to go for. I guess it looks like Robinhood is going to predominantly sort of focus on the US, given that they've now decided not to come into the UK, where you know, zero commission is less prevalent here, given that the regulations are slightly different. But also, I think for Robinhood in particular, they're not allowed to get payment for order flow here in the UK, which is, as most of you know, a significant part of their revenue model, getting institutions to pay them for their order flow. So those are sort of two of the trends that, you know, we'd like investors to continue to focus on, and we think actually COVID has accelerated the adoption of these platforms. In particular, I guess here on the sort of trading platforms, I mean, they are going after a huge market. So I think it's forecasted that on an annual basis, the market value here in terms of trading platforms, something like $91 billion. That's essentially concentrated within the large 4 trading platforms. If you think about Fidelity, Charles Schwab, TD Trade, and E-Trade. So again, interesting place here, and we'll look for more and more growth in this space. So if we move on to the next page, and talking a little bit about what we're seeing recently in both the M&A and fundraising markets. And I guess no surprise that we've seen a suppressed level of activity on the M&A side, predominantly driven by the uncertainty in the markets, but also what we're hearing more and more is that there is a growing gap in valuation expectations between buyers and sellers. As we'll see later on, this is predominantly driven by the sheer outperformance of the public market. So I think a lot of strategics and or buyout companies that we speak to who would like to either, you know, bring companies private or start a consolidation phase, which they thought COVID would really start, that's not necessarily been the case to some extent here if you're thinking about sort of a public to public mergers, just given the share performance overall. On the fundraising side, it's been a bit of a mixed bag. So I think, again, the volume of transactions has come down, but actually we've seen some significant fundraisers go through this quarter in particular. Again, focused on businesses that we think are really benefiting from this shift to digital that COVID has accelerated. And if we go on to the next slide, we see that I obviously mentioned the Robinhood transaction there, when the last valuation there, I think now is actually closer to $11 billion. Obviously, TrueLayer in the open banking space, that was an internal round. Chime as well, which is a challenger bank, but also in the buy now, pay later space, we see Affirm and Klarna raising significant rounds there to try and really push growth. Both of those players really focusing on the US, where it's a large target market, and they're expanding quite aggressively into that region. And then I guess interesting as well, what we're also thinking and seeing is that there have been sort of an emergence of mobile payment or alternative payment solutions in emerging markets. So interesting to point out to everyone here that General Atlantic dLocal transaction, where again, I think this is emblematic of something that we'll see more and more in emerging markets, either through alternative payment platforms or mobile payment platforms that are now becoming more and more central as these economies shift more and more into digital. So again, really interesting to see some of these larger rounds. The other one that I'll point out here, I think, which is interesting, is BlockFi, that raised around $50 million. And we're seeing an increased amount of interest now into blockchain and cryptocurrencies over the last 5-6 months. Again, I think quite sort of COVID related, where people are thinking about, the distributed ledger. What are some of these digital technologies that will enable the facilitation of more and more digital transactions and accuracy? So we think this will continue for the foreseeable future. So we expect next quarter to hopefully see a blend of sort of the similar types of businesses raising large amounts of capital. And if we go on to the next slide, so I think this is a snapshot of our Fintech Index. As you can probably guess, very heavily weighted towards online payments, which have been the true outperformers for the year, really. Again, if we think about this sort of digital shift, e-commerce sort of growth. But interestingly enough as well now, at least in this quarter, we've seen some of the online lenders now starting to stabilize. The likes of Lending Club, Funding Circle, and OnDeck at the beginning of the year were quite hardly hit. But it's interesting to see now those businesses starting to stabilize. Either, it feels like they're getting a better sense of how their loan books are performing, and understanding sort of what the pricing for risk is at the moment. And then lastly, if we go to the next slide, I guess, despite the correction, we see public shares hitting an all-time high. And I think in part, this is driven by the acceleration of digital, but also the support from the central banks that has just continued to pour money into the public markets. But what I would say is that, of course, what this does highlight is a growing chasm between where private valuations are and where public valuations are. So we'd see that, on a revenue basis, we're between sort of 11 to 13 times. I would say that private valuations are probably somewhere in the range of 7 to 8 times recurring revenues. So we see a growing sort of divergence there, and I think it's sort of well understood by most investors, given that to some extent public equity valuations are not necessarily being driven by underlying fundamentals, but by central bank stimulus. So that's the end of my update. I'll be sure to take Q&A towards the end, but I'll hand it back over to you, Julian.
Thank you very much, Claudio. Very insightful and quite a positive outlook. And it's very good that the investments into the fintech sectors continued at such a relatively high level. From my point of view, as the one heading the German geo and running the German office of TP Bullhound, it's quite amazing how much money has been raised by Germany-based fintechs. For example, in July, Scalable Capital raised $58 million. Solaris Bank raised 60 million euro end of June. Also quite big investment. Centerbridge invested 150 million in Ox Money end of September. And earlier this year, Trade Republic raised 60 million. I think we need to be realistic that not every fintech is a tailwind company. Some struggle and need to adjust their business models to continue to be successful. The good news is digital companies can adjust faster than traditional players. Therefore, for most of them, every cloud has a silver lining. And with that, this is, I think, a good way to start the panel and hand over to the panel. Please welcome the panel and thank you all for joining us. I would like to hand over to Alexander, co-founder and CEO of smava. Alex, you founded smava already back in 2007. I'm not sure if back then fintech was actually a name that someone knew or a category name that someone knew. Would you please introduce yourself and your company?
Sure. My name is Alexander. I'm the CEO and co-founder of smava. And thanks for having me today. Smava is the leading German pure play for consumer loans, meaning if you want to get a cheap loan, you go to smava. We actually have originated more than 9 billion since inception through our platform and when continue to grow strongly.
Amazing success, Alexander.
Thank you.
How do you see the market evolving and what impact has COVID-19 on your business?
Well, in general, I would say there's a different situation also what we hear from our partner banks across Europe. In Germany, we have seen a clear drop, which you could also see in the Bundesbank statistics around COVID, especially in the second quarter, which still holds true to some extent, meaning that the consumer demand has gone down by something like 20%. And the main reason for that is that Germans are actually really good borrowers with that regard, meaning that they don't take out a loan if they can't really afford it. And if they are concerned what the future might look like. Simply, they don't buy a new car or a new kitchen when actually they're still on short-time work. So it's something that we can see, but the market has been returning and is nearly at pre-corona levels. Funny enough, we have a lot of lenders on our panel, which also are throughout the whole Eurozone. And they have told me that the markets in Spain and in Italy are actually higher than pre-corona. And the reason for that is people simply need money, but don't have the cautious approach that Germans have. But he said also the default numbers look terrible. He said the German numbers actually look like all the time. So it's a little bit the cultural differences that come into play here.
And Alex, do you see a change in customer demographics and from offline to online?
Well, I mean, very generally speaking, we have a huge market in Germany. So the German loan market is 238 billion new loan book each year. And out of that, only 10% are already online. If you look at other demographics or geographics like the UK, for example, or also Scandinavia, the online share is way above 45 to 50%. So there's still a major headroom to grow. And we expect the online share to more than triple to close to 30% in the next 5 years. And there are literally 3 reasons. The first one is you get way cheaper prices on a marketplace like smava. You always get the cheapest price. Second, of course, you can compare. And third of all, and that's also been something that we've been seeing through the COVID situation, a lot of people are actually starting to take out a loan digitally, which is much, much easier. Instead of going to like 3 banks trying to get the cheapest loan, you simply sit on your couch with your mobile and you connect your bank account with us. You allow us to do a digital account check, and you do identification via video ident, and you're done in 5 minutes. So something that took 5 days is now taking 5 minutes, and the money is in your bank account. And we also see that, answering to your question, with the demographics, especially with the younger demographics. But now, due to COVID, it's also something that's starting to become more mainstream.
Thank you very much. And last question at this moment for you. How do you see P2P and crowd lending in such a market environment? Are they struggling because of the default rates going up?
No, I think, P2P lending in Europe is quite different from market to market. I mean, we started out as a P2P lender. There are other players like Aux Money in Germany. They're also part of our marketplace, for example. They naturally located rather in the near prime to subprime segment of the market. And for them, they clearly see more customers coming and asking for a loan. But from what we see and also heard, is the conversion is actually pretty much the same. So I would argue there's no big change there. Stronger demand, but not so much of them really getting a loan. So that's the situation. And crowd lending is not really big in Germany. So it's hard for me to judge that, to be honest.
Thank you, Alexander, for your view. Now over to Frederik, the other founder and entrepreneur on the panel. Would you please introduce yourself and Mambu?
Yeah, thanks, Julian. Thanks for having me. So I'm Frederik. I'm the co-founder at Mambu, and until recently, I was the COO there. At Mambu, we enable better banking experiences via a core banking software as a service for banks and fintechs. For the last 10 years, I supported fintechs like N26, Oak North, Ferratum to successfully roll out their platforms. We have now 450 people, and we're looking for many more. So we definitely have a hiring challenge ahead of us in those times, despite the market. And yeah, this is my background.
Thanks, Frederik. You serve so many banks and fintechs, and I know that because we helped you raise money from Bessemer Venture Capital. Therefore, you have a great market overview. Who is suffering? Who are the winners of the new market situation?
Yeah, Julian. So our teams are definitely seeing an acceleration in the digitalization of existing players, which was surprising to us initially. So, but the big winners are definitely the fintechs who are ready and have their solutions out in the market, like Alexander with smava. But also the convenient solutions like PayU, Klarna, Zest, Claudio had on a slide, who is one of our customers. So those guys we really see to accelerate and get new platforms to market as well. But we have a lot more inquiries from banks who want to be more nimble and customer experience focused. So the surprising thing for us was seeing markets that start to move that were historically very hesitant to innovating, like Germany. So inquiries from Germany definitely on the rise. So the push to digitalize and get stuff done in 5 minutes, as Alexander said, is there in the market.
Very good, Frederik. And you don't see that traditional banks are delaying projects because of more urgent challenges? They are investing in digitalization now?
as far as we can see, yes, it's definitely it has definitely turned the tide a little bit with COVID. So, but let me turn the question around, right? In times of social distancing, what is a more urgent challenge than allowing people to do everything in a mobile app that they used to go for the branch originally? So we see, yes, challenges like low interest rate policies of the ECB hinder investment, but to survive and sign up new customers, it gets increasingly harder to do that with the dated traditional channels. So in Latin America, for example, this year we have a record year, but we also see significant growth in all other regions.
Very good, Frederik. Congrats to your successful development. Now, let's get some opinion reactions from investors. Christian, welcome to today's panel. Please introduce yourself and Earlybird.
Yeah, thanks, Julian. Thanks for having me. I'm Christian. I'm partner with Earlybird Venture Capital. We do venture capital since quite some time, 23 years, going through third crisis now. And we are the largest German-based venture fund, investing not just in Germany, but across Europe, with 3 strategies, 2 basically dividing in between East and Western Europe, and 1 strategy focusing on health. So this in total basically assets, so also money under management in 1 generation is about 450 million, investing over 3 different teams as mentioned. And in the tech part, fintech plays a big role. So we have done quite a lot of fintech investments, actually starting also at a time where nobody was talking about fintech when investing into Interhyp, a company basically doing the same that smava does, but for mortgages. So basically making the mortgage market more transparent and more accessible for the consumers. And out of this, basically, we got to know Alexander and invested in smava. And N26, another company, Frogster, and a couple of others. But this is not the only in the health sector we invest. We also invest in enterprise productivities. So things that make just processes more efficient, like UiPath, robotic process automation. By the way, the first decacorn in Europe now, basically, we have a second one, Klarna, already mentioned. So we see Europe is in a good trend here. And our third sector is consumer companies like Peak Games. We just sold to Zynga for 1.8 billion, and OneFootball. Football fans here may use the OneFootball app for their scoring and the checking of football games. Yeah, so that's to me.
Thanks, Christian. So super experienced fintech investor and also benefiting from the crisis by selling Peak Games. This was probably the biggest exit ever of a German VC fund, I think, highest return.
It was the highest distribution ever for a German, basically for investors in a German fund.
So you can see you can not only make money with fintechs, but also
in COVID times.
So your investors can reinvest in your fund and invest more in the fintech segment. Christian, what do you think are the biggest changes, and what will be the next big thing in the fintech sector? You're so experienced. You must know what's the next big thing.
Yeah, we thought this basic development would come to an end somehow. So basically, we thought about a year ago something we would reach the peak in fintech investing, and other sectors may come. But still, we see so many. Well, first of all, COVID came, so we see obviously an acceleration of the trend towards digitalization, what already was mentioned by Frederik. So we see this clearly happening and affecting even more other segments of the banking and fintech industry per se. So just for instance, in the end, we still have so many deficiency and things which need to be disrupted. If you look at payments, I mean, why is PayPal not being disrupted? It is crazy that they charge 2 to 3% for just more convenience. You know, just adding a layer on top. They need to be disrupted. We're looking for this, and like N26 is working on basically kind of direct payments with the merchants, circumventing all the payment schemes. So those kind of things I think will evolve. Another thing is, for instance, when investing, when it comes to custody, why can't people basically invest small amounts into assets? It's the reason is because custody is so expensive and so cumbersome. That needs to be changed. blockchain plays a big role here, basically, because in smart contracts, which makes it much more efficient and make you allow basically to invest €5 into a real estate project, for instance, which is impossible under the old way of doing things. KYC AML is also still very cumbersome. I mean, we just got away from post-ident, which probably everybody knows here still. Now we are basically shifting this to online, but you still have people basically checking your ID in a kind of cumbersome process where you need to wave your ID left and right and do all these kind of funny things. This can't stay. So this is something that needs to be disrupted. Asset management. Do you really believe that basically people are doing asset management? I don't believe. I think it will be handled by machines, and you have then just people, watching the machines, not going crazy. So these kind of things, we already see the trend towards the scalables, but is this the end? No, I don't think so. I think we don't see people basically really giving you investment recommendations. They will all be done by automatic, by KI supported software. So that's why we see just a couple of examples that we see trends in this direction, and they are being accelerated now, since people, as mentioned already, they see that they can do many things online. They can see that the mobile is much more efficient and always available and very easy to use. So the trend, I think, supporting the disruption which we saw for quite some time, but are now being accelerated.
Thank you. Now over to Stefan, the other investor on the panel, also super experienced fintech investor. Please introduce yourself and Commerzventures.
Thank you, Julian. I'm a partner at Commerzventures. We invest across 2 funds, 250 million euros in total, in early stage companies in both fintech and insurtech, and we do that across Europe, Israel, and the US. We are a specialist investor only in those sectors, and we've backed companies such as Marqeta, eToro, Mambu, and a bunch of others. So we believe that our specialization on these 2 sectors gives us an edge in choosing the best investments, and knock on wood, so far that's working out quite well.
Thank you. What's your view on the situation? What's likely to be the next big thing in the fintech sector?
Well, when we walked into Corona and the lockdown, I think there was a bit of a repeat in terms of the reaction. Many of the VCs and the founders, the older founders, remembered the Rest in Peace presentation that Sequoia presented back in 2008 to its portfolio companies, and everybody was bracing for impact. And I remember quite a few discussions at board level to what extent one would need to think about cutting costs and reductions in force and whatnot. And Mambu actually being an example here, where some of the investors, we were a lot more skeptic than the founders. Turns out the founders were right. I mean, the business has been continuing without a hitch. So it all turned out a lot better than we all could have really hoped for. And looking at our portfolio, it's a very, very small subset of companies that got seriously negatively affected. On the other hand, some of our investments, especially on the insurtech side, direct to consumer, but also in payments, have profited quite a bit. And then, of course, in digital brokerage. So moving forward, obviously there are some specific changes on the consumer side, but also on the enterprise side. For the consumers, people have a different attitude, developed a different attitude in terms of how they think about risk and their insurance needs. At the same time, the accessibility of traditional insurance brokers isn't what it used to be. So, and then you have this emerging group of neo-insurers, which frankly have a very strong proposition. We were a bit skeptic about neobanks, and where we see the difference on the neo-insurance side is that they actually have a fully new proposition that previously didn't exist. So it's not moving from a poor UI to better UI, but it's actually delivering a fully digital proposition that not only includes a new channel, which previously didn't exist, but also gives a completely new twist in terms of how claims management works. So that's one example. Another interesting development is that the discussion around climate change, in spite of Corona, does not seem to have lost any steam. So I think that's as lively as it used to be before. Now, we think that there actually is quite a significant overlap in what a large set of consumers want to do in climate change with what you can do in financial services, in terms of setting incentives, tracking, so on and so forth. And then lastly, I think a mega trend is that the new types of fintechs don't necessarily have standalone products, but are enablers for something that's called embedded finance, where a financial transaction layer or financial service becomes part of something bigger. So we're all used to using Uber for financial transaction, making payments. So it's only a small step to use that user access, that transparency, that data for other purposes. So these are some of the trends that we're seeing.
Good. So a question to Christian and Stefan. In the past, a lot of Asian investors invested into European fintech companies. Do you see that to continue, or do you think it will change?
I actually took a look at the numbers. Yeah, sorry, Christian. Took a look at the numbers, and according to our data, there were year-to-date 2019, 74 investments in and a total of 2 billion. This year's actually is ahead. So there clearly seems to be appetite. How that is going to develop, I can't tell, but there were notable investments. Ant invested in Klarna, SoftBank in Behavox, Tencent and Temasek in TrueLayer, and SBI in Habito in the UK. So the appetite is there, but you cannot, well, you also have to see that what's happening on the political side. So CFIUS in the US has become a serious impediment for Asian or Chinese investment in the US. And I think the bigger political climate isn't necessarily conducive to the amount of Chinese investment into Europe and the West in general increasing dramatically.
No, the trend is clear. It's there. The question, I mean, mostly in a syndication role, so not so much in a lead role, but we see the lead role coming more into play also. Question, like Stefan mentioned, is how this will pan out in the future. And the issue a little bit is for our ecosystem in Europe that obviously we don't have this fund. So we see the US investors, we see the Asian investors, but where are the European investors? So this is clearly missing. It shows again that we have a lack of late stage capital, specifically here in Europe, which is filled by a little bit, well, by the US investors and also by Asian investors. But what if the Asian investors become less active? So then we may face a problem because the European investors are missing.
Claudio, our sector expert from London. I mean, you're not the EU for long anymore, but what kind of European investors do you see, or London-based investors? Anyone coming up, or will that continue to be more like US and Asian?
Yeah, I think just to follow up on Christian's points, I think you do have that dichotomy of Asian and US investors coming into Europe. I think historically probably more US investors, especially in fintech, given that London has been the epicenter for innovation there. But I think what's happening politically between China and the US, we are now seeing more and more Chinese investors looking at opportunities here in Europe. I would say, as Christian mentioned, probably not as a lead role, but certainly being active in the more established players. And we think that will continue in the event that the politics between the US and China doesn't necessarily move in the right direction. But in terms of European investors, I think we've seen the likes of Vitruvian, of course, very active in the space, and also individuals like Partech, which have started moving more and more into the fintech space. So you've got you've got about a handful of European funds that are building a good pedigree of fintech assets, but I think there's a lot of energy and I think aggressiveness still coming from the US investors.
Thanks. Now, there's more than enough money. We need the great entrepreneurs to use that money in cash. So back to Frederik and Alexander. Which challenges did you have? Because a lot of, let's say, entrepreneurs listen to that session as well. How did you react to that? Did you change your business model? Do you have some advice for entrepreneurs? Maybe first with Alexander.
Yeah, thanks, Julian. So, I mean, the biggest challenge in a situation like when COVID happened in March this year is clearly the uncertainty about how long is this going to take, and also the missing predictability, what it means for your business, right? And what do you do in a situation like this? You prepare for the worst and you hope for the best to some extent. I mean, Stefan was saying that. I mean, I remember that we had a board call, and I was just also asking my board, what are you guys doing and seeing? And basically everybody was saying, we don't know what's going to happen, so let's prepare a little bit for it. So we trimmed our costs, and that was something which, you know, was really a good measure. And then we sort of rode through the second quarter, taking a hit, and then in the third quarter we developed back. But in the end, I think it's all about being realistic and understanding that we don't really know what's happening on the one side, and on the other hand, just being extremely adaptable. But in the end, you know, I mean, there's always this saying, fear is a very good motivator, but it's not a good thing to give you advice. So it's also important to stay very calm and to sort of keep doing what you're doing, because it's also clear there's always, no matter how long COVID is going to take to fully disappear, going to be a new normal, and it's important to sort of take advantage of that, right? Because in the end, the business that we're doing, we're profiting from this situation. So we might, as a lot of online businesses, take a temporary hit, but structurally we will profit from it a lot, because in the end, people change their behavior, already changed it, and it's going to be to our big advantage.
Frederik, what's your advice and view?
Yeah, Alexander, I love the saying, prepare for the worst and hope for the best. So it's a bit the same on the business side. So we certainly did a lot of modeling and scenario planning about how this year can play out initially, up to the level of kind of 80% loss of pipeline or these sort of things. But on the operational side, we did allow for remote work even before the lockdown. So we had working from home policies in place. Also, given we are in a very critical business, we have tested disaster recovery plans, and so that includes how to run an entire company without offices. So from one day to the other, we just sent people home, and that was it. So coming prepared is definitely for disaster or crisis is definitely something I can recommend to anyone doing a bit of risk modeling and risk planning. But then I just love what our team came up with in those times, like having informal exchanges, like virtual beer Fridays or Slack channels where people share what they did on the weekend and those sorts of smaller things.
We add to this, since Julian mentioned or asked entrepreneurial opportunities and so on. I think now we have the best times for basically creating a business or building a business now. It's fantastic. I mean, we've seen the best business coming out of the crisis situation in the past, and if you look back, always great companies evolved out of these situations, and especially in fintech now. You can, because now you have things moving faster, you can change things faster, you can adapt to change things faster, and you have basically, you can disrupt the disruptors. As mentioned, you can disrupt PayPal now, you can disrupt the ID Nows of the world now. You can do a lot of things now since things are moving faster and are changing. And always in times where things are changed, great businesses can be built. And so I can only encourage every entrepreneur to start building or basically realizing the ideas now. It's the best times ever now. And there's also money. I mean, we were a little bit talking about how much money is available, but there is still enough and a lot of money in this ecosystem looking for great opportunities.
Talking about
maybe adding to that, if I may. I think previous to COVID, one of the key challenges was finding talent, right? So companies would open up development centers, and the pros and cons of going virtual on the development side would be considered, but it would be a lengthy debate. That has changed. I mean, I think the discussions around whether you can hire virtually and anywhere and tap into a much deeper talent pool, those discussions are a lot shorter than they were, say, 6 months ago.
Do you also invest virtually, Christian and Stefan? Would you invest in a company, a team that you never met in person?
That's indeed a little bit challenge. Indeed, that's true. At least we do a lot of work we would have done physically in terms of meetings and so on. We do now via platforms, Zoom and etc. But in the end, we would like to get to know the team physically also, and also basically visit their offices and so on. I think in early stage investing, it's still quite important. I would say in later stage, you don't need to necessarily. So we would I think do B and C rounds. We would do without visiting, but I think in the beginning, very early, I think it's quite important. But that's possible nowadays again. So that's why there's no reason not to do investments, and we do so.
Well, we thought about this long and hard, and as for lead investments, we do it just as Christian just outlined. For follow investments, where we work with trusted co-investors, we also invest in teams that we haven't met personally. Example here would be Curve, which was financed originally by Teammate in Israel. They have a very close connection with the founders of eToro, who we have a very trustful relationship with. And so co-investing with trusted people that are close to the business, we sort of took the leap of faith and backed the business. I think in these times, investors who are willing to take the leap of faith, obviously they take an additional risk by making investments with funds that they haven't seen, but it also gives them an edge vis-a-vis other investors. So I think there's a dynamic here. I think many of the investments that were done over the last 6 months happened with between investors and founders that had previously met in person. So that was for the last 6 months a way of sort of getting around it, but obviously we're coming to the end of that period.
Good. Do you think it's more difficult to make long-term predictions in such a time of theoretical uncertainty, or do you say because it's switching all digital, the prediction is that it stays for the digital companies like it is now? Question, Stefan.
Well, I would say you want to back the founders that can succeed in whatever environment, right? So I've seen the environment changing very quickly too many times to not believe that they could change quickly again. And typically it's those founders that react swiftly and that are really, really good, who still can succeed in those type of environments. So backing the best founders is sort of the way to deal with that uncertainty. I can't predict the future, so that would be would be hybris. Yeah.
Christian, do you share this view?
Yeah, I totally share this view. Basically, it's especially early stage. I mean, it's about great founder teams and how they adapt to different situations, and that pays off, as we can see also now in COVID times. The companies which adapted quickly and have a dynamic and agile enough management teams, they are better off than the ones who waited too long.
Right, thank you. So now it's a very difficult question, and I want to give you a spontaneous reaction. What are the 2 best fintechs in Europe you would like to invest in? Maybe you're invested already in, or would you kind of respect highly if I ask Alexander or Frederik. So Frederik probably has some clients where you can see a big growth. Spontaneous reaction, what are the best companies you should look at, or you should look at? Maybe Alexander. Which one crosses your mind?
No big surprise here. I actually like to choose two which come to my mind. The first one is number 26, because I know Valentin and Max since a long time, and I've seen how they started. They have a great investor with Christian. It's actually, it's really a great company they have been building. And I think the best, similar to Smava, is yet to come, because they just were really building a great product for a great market, and the market is developing. The other one is actually the Mambu. I like a lot, because I think, in the end, it's about having all the tools that you need to for building. And my first company was also an enterprise software company, Datango. And I think it's something that's extremely valuable. And I think they're still at the beginning of their journey. And I think they are a fantastic company. So that's the two that come to my mind.
Frederik. I would second Alexander on N26, but since he took that already, I would probably say Bunk, which is a Dutch competitor that I find does something really well that Stefan mentioned. They actually plant a tree for every 100 euros you spend on their card. So you can basically collect the forest and live carbon neutral. So you basically, with every time you spend money, you reduce your overall carbon footprint, which I personally find really, really cool. On the other side, I like Penta a lot. I just supported a few people who started a new business, and the convenience of getting a new company account that they bring to the table is pretty amazing. If you wanted to go to Stefan, as much as I love you as an investor, but if I would go to Commerzbank to open a business banking account, it's quite a struggle, I would say, as opposed to Penta, where you can also do that time spent probably 10 minutes.
Claudio, do you have two names in mind?
I would say Klarna. I think it's proven at scale now. And I think that trend towards buy now, pay later, really leverage user data to help both the merchants and the customers, it's just going to continue to grow in popularity. So that would be one of my key investments here in Europe.
Thanks. Stefan?
I'll keep those to myself.
Well, you can name big ones.
I could promote my portfolio, but
don't you believe in crowd intelligence, Stefan?
Is really right at the top, yeah.
Christian.
Yeah, well, obviously the one mentioned are already kind of proven companies, and yeah, obviously we would have loved to be part of Mambu and others we missed. We would have loved to be part of Klarna, but you can't have them all basically, and there are always a lot of missed opportunities. I think it's more important to look really to the ones which are upcoming, because those mentioned, they are already proven winners. I mean, Klarna, as said, is one of the two most valuable companies in Europe. So that's why it's a proven thing. And the question is who comes after. And if I look into our portfolio, I think Bitwala is a great company. At least the numbers show great, because they bridge the gap between the traditional fiat world, so the euro dollar world, and the crypto world. I think this is something which is missing somehow. And we see obviously these markets growing significantly, but they're hard to access, and you need basically to find something for your home for your digital assets. This can be something, and along the lines I mentioned where the disruption potential is. I want to mention now names, because there's so many names, so many young companies who nobody knows, but are basically have a huge disruption potential. So I think we need to look after those rather than the ones which are already the kind of the just named proven winners, which is very obviously that they are amongst the ones. And yeah.
So great panel, great names that came up in the end. I'm sure the fintech sector in Europe will grow fast. We can all become clients at more and more fintechs. You can invest into the fintechs. Mambu can support them. And I'm sure this sector will be a very, very important sector for a long time. And we will see good IPOs, good exits coming up. And therefore, it's fascinating to be in this fintech sector. Thank you very much to the great panel, the great discussion. Thank you to the audience. I would like to conclude this session today. A recording can be found online. If you have questions, feel free to send them by email to us, and we can answer them by email or forward them to the panelists. And thank you for the great panelists. See you soon, and good luck growing your companies and investing into the right upcoming companies.
Thanks
Thanks
a
lot. Thanks for having us.
Bye now.
Thank you. Thanks, Julian.
Bye.
Thanks.
Bye.
Bye-bye. Bye-bye.